Hey, good morning, everybody. It is October 19th, Monday, October 19th. And let's get the disclaimer out of the way. There is a New Zealand USD that just popped up at 8 o'clock East Coast time, and we'll take a look at that as soon as we get through the preliminaries here. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading session. It is for educational purposes only. No financial advice or recommendation will be provided. Any trade taken during the live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. And let's go to the charts. And right now I'm showing the US CAD. We had a US CAD at 645. It is breaking out. It's already pretty much, here's a wedge alert. It's pretty much already broken out of the wedge, and it's already up. Let's see how many pips is it here. And it went about 10 pips already. It's probably going to come down to the bottom of the wedge. We'll just keep an eye on that. I did not take that trade, but let's go take a look at the New Zealand USD and see if there's anything there that we can maybe catch. I'm going to go to my charts, and I'm going to load my, let's see, which one do I want here? There we go. We'll use this one, US CAD. USD New Zealand is what we're looking at, USD New Zealand. I'm going to go to a 15-minute chart. And I'm just going to look at just the chart for right now. We're going to see which direction it's going. The alert was at 8 o'clock, and it was a ascending wedge. So we're going to start at the bottom. Basically what I'm looking at, I'm looking to see which way is this thing trending. And this basically from ascending or descending is trending to the up. So I'm going to draw the bigger channel. I'm going to draw a channel or a bigger wedge to find out where my key turnaround points may be. So I'm going to start here at the bottom. I'm just going to draw a straight trend line. And I'm going to look to see where I have an anchor, a hit. I'm looking for the third hit somewhere out here. And I'm just use the parallel trend on this upper channel as well. So I'm going to go from, let's see, this thing has basically been trending on up. So I'm just going to take the upper channel. And then we'll be a little bit closer to the, so I got channel here. It's breaking up a little bit more. Here's the top of the alert, anchor, anchor. So here's an anchor, here's a near hit, here's a hit, here's a hit. This is the channel that we're looking in. It is moving in the upper direction. We have the alert. And let's see if we can draw a little wedge. We had this nice strong move up here, and it's forming. Here's where the wedge alert came in. So the wedge is coming either at the top of the channel, or the channel is going to break and go up even higher. And we don't know what that direction is going to be. So we're going to come over here, and you can see where this was the bottom of where our RSIs are, came back up, it's up at the top. So this is a range that's working in. So I kind of like this channel. In fact, what I might do is, let's see, there's an anchor. If you can take it, this is the start of the move from last night. Anchor, here's a hit, here's a hit. So this trend line is validated. This one is validated. We could actually even look, maybe this thing has broken a little bit already. If I take this over to here, I'm just trying to find out how this thing's trending. We know it's trending up right now because it's making higher highs and higher lows. And I'm just trying to find out where the bounces are going to be. So I'm looking at, this is the playground. This is actually the playground that is in right now, and it just broke through this channel. And so we're going to be looking at a either it breaks the upside, break to the downside. If it breaks to the downside, if it can break through these moving averages, it's probably going to come down and retest here. But right now it's looking like on the this was the third hit, and it's starting to break out the top. So, but we're just going to wait and see what happens.
Now, Al, Beach Panda said good morning, and
Good
he said
morning.
was long the Euro NZD for 30 pips on the London session. Now the NZD USD alert comes out. Clearly, the AIRIS alerts work as both are heading down.
So the euro, you're long on the euro USD, so that means the euro is strong. And let's see where our
Yeah, the Euro.
NZD is. Euro is strong then basically. The euro is strong and the NZD is weak. And now we have the alert with the NZD. If the NZD is still weak, let's see where it is compared to the euro. Let's just check that out here.
Yeah, because he
Here's
got 30 pips on the Euro
yeah,
NZD.
yeah. Basically, the euro is strong across the board, and the NZD on the 30-minute chart. I think that's my 30. Yeah, my 30-minute chart is pretty much right in the middle. So it's not showing real strength of stroke weight. It is weak against the euro, and it is weak against the euro on the 15-minute. But now, as far as the U.S. dollar, you see how right now there's really no real clear direction on this. On the 15-minute, which is this time frame right down here, they're right together down here. And this one is still on the 30-minute. It's still stronger than the dollar, which would be favoring the downside, favoring this thing to and be actually still favoring to the upside, to the breakout. And over here on the 5-minute, it's still showing weakness. It's showing that it's flipped over here. So the dollar is now getting stronger. So we may be getting to the end, to the upper part of that channel that we were looking at. Move this thing over here so I can look at it in a different monitor.
Hey, good morning, everyone.
Good morning, Matt. So right now we have, Matt, we just to keep you up to speed is we're working on the NZD USD.
Okay.
On the NZD was weak against the euro, which we looked up. Beach Band brought that to our attention. But right now it's they're kind of fighting for last place with the dollar. We did just get a breakout of this upper trend. It was an ascending trend alert at 8 o'clock. Here is the trend. This was the third hit of the trend that I drew from overnight. It came down. So it was this area is valid. We did get a little bit of a breakout up here, but let's take a look at a higher time frame and see where this breakout here could go, how far up. So I have a reference line here. Let's see where that was drawn from last week. Let's see where that is. And that's right over here with another upward trend. I would say this is the target. If it breaks the upside, that's the target. And do we have enough room to make that worth our while? Let's just see. We have from here to here. That's 10 pips. This could give us a little of a head fake right up in here. Let's see where we're looking at this from another height. This trend is down. This is strong. We had a parallel down. This broke up here. This was last Friday, and now it broke, came down. It's coming back, and it's retracing. This is a retrace area. I'm inclined to think that from here to here is going to go break down toward to the downside again, from a higher time frame perspective, and then this could be the possibility of the target on the downside. One thing I want to be real careful. The fact we've been getting whipsawed so many times on these breakouts of these 15-minute wedges, we have to default to the higher time frame to give us a better feel for which way things are going. And if it does break, I mean, we're only looking for 5 pips, and you can just barely get your 5 pips to this line. This would be the next target up here, and I'm going to put that right about on top of this red candle here. And then I'm going to take this one and put it on the top of the red candle up here. So we have, these are our 3 zones. If it breaks the upside, these would be the 3 areas we'd be looking for a turnaround. The question is it going to turn around? And I see this nice move here. I'm going to put a fib tool on this. Take it down to here. I'm going to pull it back up and see how far, what kind of retracement do we have? And from right now, we have a retracement to the top of the fib line, which is right here. We have right around a 60% retracement. This thing is
That's pretty deep.
That's a pretty deep retracement, but it's well within the category of having this thing come down, retrace 60%, come back down, retest this, and then keep on going further. Or it could, in the same token, is it could come and just retest the bottom of the trend line. I'm more inclined to think it's going to pull back up, turn around, and then retest the bottom of the trend line. That's kind of where I'm thinking. It's actually the biggest playground is from here up to here, and this whole area is a range that we're looking at of being as 135 pips, which is a nice little range. But right now we're just trying to get a few pips out of where we're looking at here, and this is the channel we're living. It's broken on this, but we have to be mindful of the fact that this is a strong pullback. You can see the angle of that. It's pretty much a strong pullback, pretty much right from this area right here, which is October 15th, which was, is that Friday? Let's see, Monday. This is Friday, probably Thursday, I guess, was the 15th. Thursday was 15th. So this is a pullback that started on last Thursday, came down, retested this bottom. So this is the box that we're looking in right in here. So right now we're in the middle of the, if I were to take this all the way down to this area, take down a little bit further, take this one up a little bit higher, and see what kind of a pullback we have right now off of last Thursday's low. We're right at, again, we're right at the 61% pullback. I think at least for the beginning of the week, this is Monday, so everything's still sort of jockeying for position. I'm not going to be in a hurry to take this trade, even though it did break out of the top of this wedge. It is a stronger move, but I'm thinking it's going to run into some problem here. And up here, I'd be more apt to think of trying to pull to get our 5 pips out of it.
Yeah, I'm going to be very cautious.
Yeah, this one does.
Very cautious.
I mean, this one, right now, this one is a 60% pullback from last week's wedge, which we drew here. It's still up there. It broke out of that. It's coming back. It's retesting the bottom of this wedge right here. Here's where the bottom of the wedge was, right in this area. So we put this. So basically, as this thing's pulling back up into this is basically our supply zone. This was coming up, came back down, retested. This is where it left last time. I would like to see it get up a little bit higher up in here and then look for a turnaround. And so we could move this over to this point, move it up to where this thing is coming up to retest this move right here.
But even then, Al, this is a very narrow wedge.
Isn't
it?
On the alert?
The one that I see?
Well,
you're looking at the hour. Okay, I got you.
Yeah, I'm just trying to find out where our targets are is what I'm looking at right now.
Oh, I get you.
We go to a 15-minute, and this is where the alert was, right up in here. But it was still respecting the overall channel to the upside. So the fact is respecting the overall channel to the upside. Let's wait for a pullback. See if we can catch a nice little pullback back down towards this side. Now this could be, like I said, here was where the alert was. So this was the high before the alert right here, which does help to extend this channel. Let's see if we can draw 3 lines here on this one. We have a hit here and here. See, this is where it broke, but we're still respecting. This was still the anchor, and this is where the anchor first got broken. From where the anchor, here's the first high, second high, and so it did break, but it's still on I'm still letting this thing sort of develop still. So this one's still actually kind of in parallel. Let's put a parallel channel here. This is a zone we want to be, because here's our target up in here. So I'm going to be looking at our third hit on this higher time frame to be hitting up here, or if it's going to break to the bottom and then give us a chance to get back down. But this is a strong move up. So we're just trying to figure out where are we looking to try, where's the high going to be, and where's the most likely low going to be. And so I do like this here, but so this is a new playground we have. This is a little bit lower, smaller channel, which is good because this will give us our chance for the retracement. That's 34 pips. So that's a 34 pip move. We had the alert. We've got a nice little wedge developing up here. This was a ascending wedge. So here's where I would draw the smaller wedge of where the alert was. I'm going to draw it off of this area right in here. So I'm going to take my tool. Bring it down here to this low. Actually, it was an ascending, so I'm going to start down low. I go up high to bring it down here. And then we're going to flatten out the top and see where the break is. And here's it's coming to break here. We've got to get through this A, but we are in the upper top part of the channel. Had a nice little pullback. Is coming back in to respect this one. This was the break of this was the anchor. Here's the first hit. Here's the break of the third hit. It broke to the upside. And so now we're going to see where this thing's going to be going from here. And let's see, ascending. It's going to have to break through this A before I would want to take it short. I guess see where my moving averages are on my other time frames. I get this thing coming down. This is the area where we're looking at. Let's go to our lower time frame. Go to my 5-minute chart, see if we can tighten this thing up a little bit.
Oh, this is just a hunch. This is just a hunch.
Yeah.
But we're going to get another alert on this one, on NZD USD. It's going to be in the opposite direction because this is that first wedge. I didn't like it.
Yeah, I didn't like I mean, it broke to the upside, but it didn't. Again, it was one of those where it broke with the alert. Actually, here was the alert. It broke prior to the alert. We have a little upset up. There's our same repeat of the bigger channel. What we have is like higher highs. Here's a low, higher high, higher low, higher high. This wedge is getting smaller and smaller as you go further out. Here's the break, but we still have to get through this A, and also we have this 62 moving average in here. That disqualifies it for me right there. Just the fact that it's breaking the wedge that we just drew with the alert is breaking when it breaks it's breaking the C now, but it's breaking it right to get into the 5-period 62 moving average, and the distance between the break of this and the 5-period is only 5 pips. That could be another head fake, and here's a head fake, here's a head fake. It's not ready to break yet, so I'm going to stay out of this trade. And the thing is, what we're trying to do is we're trying to learn how to qualify the trades based on what the higher time frame's doing, based on how much room we have to the potential bounce point. And so I'm just going to stay out of this one. It's just, and plus our RCS is right now on our 5-minute. It is showing strength to the downside with the dollar. And if we look in here, it's still showing strength to the upside with New Zealand. So we have a 2-point spread strength in favor of going up. We have 4-point spread in favor of going down on the 5-minute. I'd say they pretty much disqualify each other, and we wait. And did we just get another alert? No, not yet. So, but let's just, we'll watch this and see if our analysis is correct, and see if it gives us an opportunity possibly to get in somewhere. But right now I'm seeing it favoring the break to the upside, but I just don't, you'd have to get a really good, if I can get if things start to qualify when it bounces off of the 62, then that might be a qualifier to maybe take it long. But right now I'm more in favor to the upside than I am to the downside. Or I'm looking for a strong move down, come back to reverse it, and then come down. I'm looking for a couple different things here. If I go to my 5-minute chart, and I'm just going to take the chart on here, the price section. Strong move up, small pullback, strong move, or relatively not a real strong. This is not, I don't consider these to be real strong moves. This is a strong move. And so if I want to see this thing pull back, probably if this thing pulls back from here up to here and pulls back to this purple line, let's just see how much of a retracement that is. And if we take that
I'd only get in. I'd only get on the retracement, Al. I wouldn't be messing around with something like this. It just looks like a dirty wedge.
See right here, what I'm looking at, here's a strong move up. played around a little bit here. If you just go like just from this area, from here to where it pulled back to where the C was, it didn't pull back that. The fact that it came up here, pulled back, it didn't even pull back 40%. And when it pulled back 40%, normally if it's a strong move, it's going to go and just, it's going to come back and snap on up all the way up to here for the target. But it didn't do that. And that's one reason why it needs to pull back a little bit more. So I would still want it to see, so now I'm going to use this area, take it up to this one. It's still trending up. It still broke the wedge, but again, it's running into some problems up here. If it pulls back, I'd like to see it pull back at least 40% into this area, which is right where this is, get a bounce. Now let's just see where we are on our 15-minute chart. I'm just going to unshare that. Now we can take it off of, let me take this over here, take that off of there. And let's just see where we are on the 15-minute chart as far as where our moving averages. Now we have this 62 is all the way down here. So right now we have the 62, the 13, and the 5 all in the right direction to go up. If we get a bounce off the 5-minute 62, well, the 5-minute 62 is all just right down about where it is coming in right now. I'd like to see a little bit more of a pullback and then possibly maybe take it to the upside with some strength when the RSIs get back down below. And that's pretty much how I'm going to qualify this. So I'm going to see this thing pull back to about this area, and then we'll reassess. I'll move my 5-minute 62 so I can duplicate that on the other charts. So that's where it is here. That's where it is over here. And that price is at 66.35. So let's just move this thing over so we can see it here at 66.35. And we're going to wait and see if it comes down, get a bounce off of that. And the moving averages over here are, here's the 62, the 35. So this thing is moving down. If it bounces, comes down, gets the turnover of the moving averages and still gives us room to the upside, then we might have a trade. But right now I'm looking more of a bounce to come down into this area. Any thoughts, any comments?
Not of a heck of a whole lot, Al. We're just waiting for a retrace. I mean, I'm not looking forward to jumping into a trade this early, especially when it just looks like it does.
It's Monday morning. Everybody's getting their positions for the week. Let's see, this is October 18th, and at 9 o'clock, this is the what is that one? Sydney? No, what is this one? CNY.
CNY is not one we trade. It's the Chinese yen.
Is that's what it? Okay, I didn't look familiar. There's not a lot of news here. Oh, that's Sunday. Let's go. We're on Monday. Here we go. The 19th.
I think it's Chinese yen.
That sounds about right. That might be right. Chinese yuan is what it would be. Let's see, I'm not sure.
Oh, yuan? I thought we just called it the yen. No, is there different currencies?
Well, the Chinese is the yuan. Not a yen. Not a yen.
Oh, yeah. No, my bad. Wow.
So.
Yeah, no. I get it now.
But there is an Aussie, some news at 8:30 tonight. Nothing real after 8:30 this morning, which is another 5 minutes. There's really not a whole lot going on. 8 o'clock, there was a U.S. Fed Chairman Powell spoke at 8 o'clock, which he's doing that right now. That's probably one reason why it's moving a little bit. Not a lot of big news folders here, so.
No, we just got the OPEC meetings all day.
Is that what's going on today? OPEC?
Yeah.
Beach Panda has a comment. Shot and demo, Jackie method and Shem, also based upon the retracement from my earlier Euro NZD long trade.
Okay.
Entered at 66.40.
Shot in demo. Does that mean you won in demo or you lost in demo?
No, I think
It's not done yet.
Yeah,
He took a shot.
I took a shot. Oh, took a shot. Okay.
Yeah. He pulled the trigger.
At 66.42.
66. 42. This is on the.
No, it's 40, and then the fifth one is 2. So maybe I should have just said 66.40. It would have been more easier for you.
So I'm still waiting for us to come down and bounce off of the 62 and see if it gives us a reason or range to get up. But if it bounces off 62, that means it's back inside this smaller wedge. It's inside the bigger. It comes back inside the wedge from where we had the alert. And actually, it's breaking out of the bottom of this. It's actually breaking out of the bottom of this. But if I flat, so it's breaking out of the bottom. Again, I want to see it break this A before it. If it can break the A, then we have room to the downside. So if it breaks the A, comes back up, retests this zone, then we might have a shot to the downside. But it would need to do something like that. So it needs to break the C, break the A, comes back into the zone, and then maybe it can come back down lower if it's showing weakness. Right now, I'm not so sure. So I'm just going to stay out of this one. Like I said, I'm not going to be in a hurry to take. We've been getting. I want to just qualify these trades before I just jump in and just take them. And I'm going to stop just taking trades and say, well, let's see what happens, because all it does, it helps. It changes your mindset, and you start thinking you want to only take the trades, demo or live, that you feel have that meet your criteria to take the trade. And so we have to learn how to qualify the trades as well as learn how to take the ones that seem to fit. Now, just because this broke the bottom of the wedge, you can see it broke it, came back down. It couldn't close below the C area, couldn't close below here. This just seems to me like almost like another trap.
Yeah, no. And I think that's the biggest thing, Al, is to make sure that we're qualifying the trades and we're not just swinging the bat at crap trades.
Yeah.
Especially this early in the week, you want to set yourself up for a good week. Taking a loss on a crappy trade in the morning, taking a trade that you don't think you're going to win, or that you're not like almost certain that you're going to win, is just gambling.
Now, here's something that I've noticed in some other things I've been trading, is that you have a strong move up and you get a pullback where it comes back at least 40%, which is right here where this is. If it comes back 40%, a lot of times you can catch an entry right in here. And if you can get like your 5 or 7 pips between this area and this area right here, that's a high probability trade. And that's before. So, but what it's doing is giving you the pullback enough to and still be able to get in the trade and get out of the trade before it actually hits the upper wedge. If it keeps on going, all the better. But the question would be, is there room between here and here to get your 7 pips? There's 4 pips there, which means it would have to go all the way up and get up to the top before you even get close to being able to get your target out. So this would need to pull back a little bit more. I'd like to see this thing pull back more before I would get into this. And if you get the breakout, then the breakout is only going to be up to here. So again, it's not a real it's not what I call a real the range that we have is not that great to be able to want to even jump into this trade.
Well, Beach Panda says he's in demo because I made my pips for today in the London session. This is just a test.
Well, and there's nothing wrong with taking demos to help qualify and confirm your trading system. I'm all in favor of that. But just make sure that you're qualifying it, and if you take a trade that doesn't fit the criteria, or you start it helps you to eliminate certain setups that you say, okay, this setup doesn't work, or this setup doesn't work between these times, or I need to have a strong enough move to be able to get into the trade, or I need to have X amount of pips to be able to get to the target. If you don't have that and you take the trade, all you're doing, then what you're trying to do is keep a record and confirm that you're on target about what your qualifications are.
I like that, Al. And you're saying, are you kind of saying that you need to, sometimes your demo account is not to really, not to win, but to figure out what doesn't work?
Yes, that's exactly what I'm saying.
I like that. I've heard that before, and it's not the first time. I think people try to win too much, Al, and they don't give themselves the time to learn what doesn't work. And if you learn what doesn't work, then eventually you'll know by default what's going to work for you.
Yeah.
And people are so rushed, right? People just want to make lots of money really fast, and they might get lucky a couple times, but then they end up blowing their account, and that ends up being like 90% of people. They think they got it, but they never learned what not to do.
I took some trades the other day. It was on Friday, and I sat here all day. I was looking at and I'm used a little bit. What I'm showing you here is what I determined was working on another indices, and I'm doing the same thing, drawing the wedges, seeing the moves, trying to see what the pullback was, and I took every trade that I could see for all day Friday, and then I found out that had I just cut out the trades between 11:30 and 1:30, it would have over tripled my results for the day to the positive side. So I said, okay, what I found that what doesn't work is don't take the trades during that certain time of the day. That's one criteria. Or I may find out that, okay, I need to have a move going up X amount of dollars or pips or whatever you're using for whatever your criteria is, and have a pullback, but it's got to hit that range first to be able to get the range in between here. Like I was saying, is if this thing pulls back bounces off of our 62, that tells me it's pulling back into, right now, this thing's pulled back about 38%. Now, this thing pulls back 38%, bounces off the 62, and can come up and what I'm going to do is try and grab some pips between here and here. So if I enter it here, and if I can get this thing to pull back, it keeps me out of the trade until it comes up and tags me here to go long. But I need to get a pullback strong enough to where my 36 by 38% retracement gets back down at least 38%, and bring it back down here, bring it back a little bit more than that, have it fall into this area, and then the snapback would be trying to get in from here to here before it gets to the top of the wedge. And if it breaks here and keeps on going, all the better. You just got a really good entry. If not, it keeps you out of harm's way. And that was something I was working on this past week, for a criteria to have a strong move up. You got the momentum; it's ascending. We've got our bigger wedges right here. Actually, this was the trap that it had in the upper part, but here's the bottom. So if this thing pulls all the way back to this area, this is actually the origin of where this move was. And I'm on a 5-minute chart, so I can go all the way back to there. But now I want to see this thing pull back at least into this area, or at least touch this. And then if it can tag this, then it gives me enough room to where I can get a sell stop or a buy stop here for the target here. And now let's see, I've got the pips of 66.40 to 66.46. Again, it's only a 5-pip zone. So again, there's not enough movement here to be able to get your spread. You have a 5-pip zone. You've got a 1.5 pip spread. So you're going to need 3 pips, 1.5 to get in, 1.5 to get out. You're going to need a 3-pip spread in order to get your target. And you want your 5-pip target, you need an 8-pip target in here. So unless I could get 8 pips in here, or at least 8 pips to the top of the wedge, which you might at this point, it's just a no trade.
Al?
Yes.
As a continuation to Beach Panda's comments, he was saying that he agrees with you 110% about the charting and practicing a demo. And then my charts are so marked up that I can easily see what is consistently working and what is not working. Labels help a lot. I think I'll learn a lot of discipline and patience more than anything else. Hawkeye also significantly helps me hone in on my entries.
Well, good. That's a nice thing to say. Thank you for the comment. I appreciate that. Sometimes I often wonder when we get stopped out a lot, I'm not so sure we're doing everybody a service or not, but like I said, the market's changed. We have to learn how to change to adjust to those. But like I said, right now, what I'm seeing with this, we had the alert, we had our wedge, it broke out the bottom. But again, you're seeing that here's our trap. It came right down into that trap area. It still has room to the upside, and see what our strength is on our 5 minute. It's still showing the dollar and the New Zealand dollar is still right about, they're still fighting for last place. There's just not enough room to take this trade. I'm just going to let this one pass. But we can sit there and analyze these things all the time and see how they work. And we'll keep an eye on it, and I'm just not going to take it. But it's okay to look at them, see how they price move, see how the retracements are, see what kind of move you get with a certain pair. Because each pair will acts a little bit different. A lot of times they're a lot the same, but sometimes there's just enough difference to where one system may or may not work, and you start getting a feel for the certain pair that you're looking at. Let's go back over to the US CAD and see how that's doing. Okay, here's this is our main trend. It's trending on down, and you can see where here is the alert. Here is our we can have, it was a descending wedge. So actually from this one, we probably should have been up here like this. Take that off. So descending, you're going to start off at the top and the bottom. Here's the descent part. So I'm going to start up here, come down here, come on up to where it retested, where we are trend test. And now we flat top to bottom. Let me just pull this over. We did have here's an anchor, here's our hit, here's our third hit. On the third hit of the trend line, it was rejected. So that validates the trend line. So I'm just going to be looking at, this thing is channeling. I'm going to try and get in, if I were to take this, I'm going to try and get in short up here somehow with the, looking at it breaking out so looking, and as you see, it's getting smaller and smaller and smaller. So right now it's still inside this whole area right here. Again, probably not enough room to take the trade from the CD area where it's holding right now to down. That's 24 pips. Actually, that is enough room if you can catch it to the downside.
Yeah, I like it to the downside, Al. If it bounces off of that top of that wedge and it rejects like it did a couple times already, that's a trade. That's a very high probability trade.
So here's our major trend line. Here's the alert, descending. So we have a high, a low, a lower high, and now we just got a lower low. So right now this thing is starting to break to the downside. Now if it comes back up here and tests, and we get a hook, we could possibly take this thing short. If everything is still showing in the right direction, and we have there again, the US and CAD are showing only a 2-point spread, nothing to write home about. Over here on the 5-minute chart, we have a little bit better favor to the US strength. And that's just because this little pullback here. Here we had the pullback. And now we're favoring the US CAD to the downside on the pullback, which is what you would normally see. You would see the stronger move to the downside, but you see the pullback where actually, let me take that back here. The US is strong, so that means it's favoring the downside. But as it, see, this one's showing the strength to the dollar on the 1 minute. What is that telling us here? Let me think about this. CAD is strong to the downside on the 1 minute. So basically it's showing strength on, so right now they're in conflict. Right? They're in conflict.
Yeah.
This is saying to go long, but now the 1 minute is saying to go short on a pullback.
Now, there might be a very interesting setup. I know we threw the news NZD USD right off the boat, and we said, well, we're going to wait for a better setup. It's on its way up. If I get a really nice bounce or something to say that we're going to go to the downside, it looks like a pullback to the downside. So that could be good.
On the NZD?
Yeah.
So this is a pullback to the downside, is what you're saying.
Yeah, that's what I'm seeing, but we'll see what happens. It could just be a pullback to the upside, but I've got a wedge. I've got a wedge there, so I'm trying to see if it's. I got a 1 minute wedge, so just about to see. Oh no, we're up. Hey.
Yeah, I'm just seeing too much conflict on this one right now.
Oh yeah.
The thing is, it broke a channel. It broke a third hit on from the overnight, but it only went up 8 pips, and now
that's no good.
And so right now it's still trading inside a very narrow range from about here to here. It's still only 10 pips over the last. Oh, let's see. This thing hasn't traded more than 10 pips over it's traded in a 10 pip range from here to here. Over the last 3 hours, it hasn't traded more than 10 pips over the last 3 hours. Now, if you want to sit in a trade that normally takes about 15, 20 minutes and wait 3 hours for it to break out, well, that's fine. You can do that. But I don't like it's just not enough. There's just not enough movement to justify taking the trade for me.
You're totally right. All right, cool. So we're going to throw that one out with the bath water, I guess.
So, but what I will look at is that once it breaks out of this range and gets a strong move up or a strong move down, then I might be looking at possibly trying to get in.
UCAD is coming down.
Okay, so do we have a trade?
Yeah, here? I took it.
And you took it on the hook?
Yeah. Because that to me that's a big enough candle for me to justify saying, hey, you know what? I'll swing the bat here because it's a bounce off that very strong trend line, or almost a bounce. It's close enough for me, and we'll wait and see what comes out of it. That this would be could be a little bit of a more aggressive entry. So, but I just figured I'd let someone know that I took it.
Okay, well, I'm glad you did. And let me see.
What was your entry, Matt?
Oh, just like right now. Like
you just did market order?
Yeah, I don't let me see what the entry is.
About 31.74-ish, maybe?
31.74. Exactly.
Yeah, down.
No, it's 35. It's 75. 75.
And you've got 10 pips to the bottom over that last move down.
Mm-hmm.
And let's see, we're showing dollar strength here.
Oh,
not by much, dollar strength. I would like to see dollar strength on this. I'd like to see dollar strength on all three before I would take it short at this point.
Yeah.
This is still showing a pullback. Now, if we can get this thing to flip with dollar strength, if we can get this thing to start pulling away with a little better than a 1 point spread, this has a 3-point spread. That's not bad. This is still showing strength to the downside.
Look at that.
So we're going to get dollar strength here. So now we're going to get dollar strength on both sides as it comes up to retest the wedge. And let's see what happens with this. Keep an eye on this one. This one could be an interesting scenario.
It could.
Matt,
I'd like to see this one come up a little bit more. Let me just see here something.
Yes. What's up?
Somebody had a question.
Ava.
Yeah.
Oh,
Ava.
I was going to ask on behalf of Rashawn if it was short that you got, but Christine answered him.
Oh, yeah. No, it was short. I decided to go short. It keeps on making lower highs just from the whole price action perspective. So I'd be surprised. I always say that. Anyway, I'd be surprised if out of nowhere it decides to make a higher high.
I'm always surprised.
Yeah, I guess you're right, Al.
Now, Rashawn says, I see the reason now on the 5-minute.
Mm.
We have a nice little hook up here. And we have a hook, and the 5-minute RSI is now crossing the 8 to the downside. So that's now now the stop would have to be the top of the wedge. And if we have that, we're looking at that would be a 10 pip stop. You can still pull it off a 10 pip stop if it breaks to the top of the wedge. I am seeing it favoring the downside right now. Dollar strength, that's showing dollar strength there, but from a price standpoint, it's not. I'm not liking it to that. I do like this channel. I do like the fact it bounced off of that. You do have a lot less risk. I mean, if you look at this 15-minute chart, I can see why you took that like this, Matt. Because
you do?
I see why you took it. Yeah. The question is the risk reward appropriate for this? So if you have,
well, we're about to find out, Al.
Yeah, I mean, if you got in, let's say right here, and you're looking here, that's 21 pips with a 8 pips. So you got about roughly a 3-to-1 ratio. I like to see on the, let's see, at least on the 5-minute, I'd like to see, we got the cross there. This one's still pointing up. I want to, the fact that 5 minutes confirming, the 15-minute, we have the hook, although it hasn't reached, the blue one hasn't reached up here the 89 yet. So this thing still might have some room to the upside to whipsaw you. This one is crossed over. We got this one came up to the 89. The blue one came up to the 89 and it crossed the 8, all pointing down. These are all starting to point down. This one's pointing down, but it's moving up to retest this area. A break of, I would be looking at perhaps from this standpoint, what I would be looking at doing would be looking at I still think it's got more room to the up. I still think it's got more room to the upside here still. I do like this move, and I like this retracement.
Let's see here.
Actually, this is
check this. This is good. Al, this is real good. All right. Hey, hold on. I'll share my charts. How about that?
All right, go ahead. While I redraw this thing here.
Okay, yeah.
Can you take it?
Yeah, I'll take it. Yeah. I forced you to stop showing and then share. Let's go take a look here. I got something cool. And I'm happy about it. So I got a pitchfork. It's a 5-minute pitchfork, but I put it on the swing high to the swing low of this move right here. So what I was looking for when I drew this, I was going, oh, sorry, that's not good. I didn't get it at the bottom. There, that's better. So, and we're gonna go up just a little bit. Anyway. All right, so what's happening is these pitchfork lines are basically trend lines on steroids. So when I'm looking at, let me see, ink to go. I'm going to draw my charts with my little tool here. Let's go white. All right, so I'm putting swing low to swing high, and the pitchfork has to point down. Okay. Now, what I'm looking for when I'm drawing this is this bounce here, this rejection. And I'm looking for not too many breaches on this middle line here. I'm looking for it to respect this middle line where it's going to bump and pass and check and bump. It's not going to slice through too many times. Here, I don't really trust the bottom trend line. Not too much anyway. Now let's keep on going over here. So now here's where it gets interesting. I set it up over here. I've got a point that it passes it and it bounces it and it respects it. So it kind of knows this line. Price kind of knows where this is, And I would say it kind of knows where this line is too. And you see how price comes up, bangs it, and passes it, and then takes off and touches it again. This is a little bit off by like 1 pip, so that's okay. That's my little 1 minute wedge. Not super amazing, but that's where I took the trade. I said, all right, you know what? It's fine for me. I'll take that piece because overall it's on the downtrend. So let's go see what the 1 minute's saying. So the 1 minute, you'll see the same kind of story here. We're just waiting to see what's going to happen. I entered that trade a little bit early.
I just entered it just now with the sell stop at 31.72.
Yeah. Okay. Oh, so right here.
Mm-hmm. It just got
filled. Now you're filled.
And my target is going to be 7 pips below that. And so my target is going to be right at, let's see, 31.72.
So this pitchfork kind of gave me the direction of the overall move. It gave me the trend, overall trending to the downside, at least on the 5, 15, 30-minute overall downtrend. And the one thing that I wanted to do is make it a little bit more accurate, because now I'm going to put this one white so we don't go too crazy, so it's not too hard on too many people's eyes. It's not attached properly. Now, I'm looking to line up the middle. Remember I was talking about the middle line? Call it the median. That's pretty good. This is pretty good. Now, I can throw something on here. I can throw another line that's 50% away, and it tags it to the pip. So let's see what happens here. This is a strong move against. We'll see. Let me see where I put my stop. Oh, my phone's dead. That's not good. I think I need a new battery on my phone. Still not quite into my entry. Now I'm down about a pip plus spread. So now we're down 2 pips. Let me open this up on another chart here. As long as this stays under here, I'm still comfortable. You guys still see my screen?
Yeah.
Okay. I don't know. Sometimes I don't see the little box around it. So let's see what's happening here. Yeah. Let's wait a bit. So I'm expecting to get a little bit of heat on this one. and my, oh, I didn't put a stop loss. Look at that. The reason you want to play with a stop loss is because on Friday, GBP, Euro GBP moved 97 pips in 1 minute. So those moves do happen. They're rare, but you don't want to get caught on the wrong side of that thing. That could really cause you some damage. So my stop loss based on my entry, so we're 31.84, I believe is what we're going to use. And that way, that's my emergency stop loss. Like, hey, holy crap, things are not working. Get out of there. But before that happens, I would probably exit at this point here. This is interesting, Al. This looks like this could be a two-wave, like you're 1, 2, 3, whatever from Elliott wave perspective. This is just backwards.
I do think it's favoring the downside. It's still trading in a relatively rather narrow range right now.
Mm-hmm.
But I'd rather be getting up on a downward trending channel. I'd rather be getting short at the top of the channel than
in the middle.
Than in the middle.
Yeah.
You want to try and stay out of these middle areas. I'm going to take the charts again.
Yeah. Go ahead.
So I can find my.
You just hit the button.
Share screen. Yes, and we're going to go back to the charts. And one thing I like about with this on the 15-minute chart, you see this nice little. It's a nice candle wick. It's got it came up, tested the wedges. It closed with basically a bearish candle. It was a bullish candle, but it closed pretty much neutral with a nice little wick on it. So that's my stop is going to be up in the top here above the wedge, but I did get in with a pullback. I see that was from the low here. This was the bottom of this channel here. Pulled back, came up, tested, and I got in right around in this. Actually, it was another chart, I think. Let me see here.
Machine has a comment. Rashawn, sorry. So the Aussie is moving downward. So if it continues short, US CAD will go along.
If the Aussie, say that one again.
So Aussie
the Aussie is moving downward.
So it continues
we're not doing the
short.
Aussie though.
US CAD will go long. I think he was looking at Aussie and then saying that this will follow.
I don't know that that's the case here. Let me see.
Yeah, I don't know. So you're saying the inverse. He's kind of talking about the inverse correlation between the currency pairs. That certain currency pairs move in certain directions related to the other currency pairs. So I think that's what he's talking about. He's saying if the AU continues to go down, then UCAD will potentially continue to move up. Maybe at a macro level, but there are differences. Just like they don't move exactly at the same rate. Like a lot of just because they're inversely correlated, some of them they're not going to move 10 pips in 5 minutes, not both of them at the same time. So it can still give a person the opportunity to make their pips and hit their targets.
If the dollar was at the extreme of a strength or at the extreme of a low, then you might be able to say, okay, if the dollar is stronger than all the other A currency pairs, then we would be okay to assume that it's probably strong against the Aussie as well. But where it is right now, with the dollar being right about in the middle of the currency's strength of the other 7 pairs, I couldn't make that I would not make that assumption.
So this is going to be a shot in the dark, just because we're waiting on UCAD to do something, and it's breaking nicely, eh? Look at that thing.
Yeah.
I think we got a good trade, Al.
Well, so right now, if you're looking at, there's only 4 pips from where I got my entry. So right now I'm about 4 pips up in this trade. I would like to see it come down. At least I should be able to get from, let's see. Well, I didn't get the entry. Well, I had the spread here. This is the spread. But when it came back and tagged, when it pulled back up here, hit the wedge and came back and gave me a buy stop or sell stop right here at this 3074 area. My first target looking is this 38% retracement, but I'm looking at trying to get my 7 pips out of, if it can break into this little area right in here.
Before it turns around, Al, I will see that it gets a lot closer to the bottom there to 3163.
See, this could be another trap right in here.
Like 3163 or something. We'll see what happens there, but
you see, like right now, see where it kind of tagged right into this area right here. This was that third. This is just that normal retracement, 23% to this 38%, 2% of this whole move. And I would.
Yeah, that's true. That's true.
That's why I see a lot of times you might get another little bounce right off of that.
Yeah, you know what? You probably will. But
right now it's trading.
If it retraces,
it's just trading inside. It's just trading inside this region here. Right now, it's in about the middle between. If I were to pull this trend line down here to the bottom and move this up, you can see it's just and move this up to right from the bottom to the top of where you can see it's pretty much right in the middle of this area. And that's why it hasn't broken out of this wedge range yet. And it's still, I mean, there's some room in there, but it's not going to be anything real dramatic, I don't think, at this point in time. At least not from what I'm seeing here.
Could be.
This was the move I was looking at. I was looking at this strong move coming down, looking for this retracement of this move. Yeah. And looking for it to come and retest this little zone right from the, as I pull this back, I mean, it's creating somewhat of a trend here. You can see that's, as I pull this back up to the, when I bring this retracement up to where the top of this thing was, where I basically I'm bringing this to the top of where you get the wicks inside this overshoot zone. This was the 38% retracement. It's coming down, and this is where the wedge is. And this part of the wedge hasn't been formed yet.
Aussie US has a strong sell. Let's put it that way. At least from a lower time frame perspective. I was just going over there just to see what's going on. But the Aussie US has an insane. It just went 10 pips to the downside, but US CAD hasn't really moved. It's slower. So we could get a big pullback. If we do get a big pullback, then that means that correlation is playing exactly like our friend has said.
Now, we don't know where this trend line is yet, but I'm not really caring about that trend line. I'm just caring more of the pullback of the upper move. But you can see that it's trying to get through this area right here. If it can break, it's probably going to break, but I'm still looking at no more than the target at where the D is. That's where my target is. I might even make that a little bit more conservative than that. That's only going to be 6 pips, but that would be a reasonable area to be thinking that it might come in here. It still would have to break the D in order to even to get down to the bottom of this wedge here. And it could very well do that. But it's probably going to get a little bit of a bounce off of that first. And if we have some follow through with the other time frames.
Oh, I was talking and I was muted. I apologize, guys. I was saying that I have a really good friend. Her name is Jackie. Some of you might know her. She does a whole lot of things with correlation, so price correlation and how different currency pairs move, and has done phenomenal things with it. Let's see this USD CAD, Al. Let's see where.
Let's see where it does. Well, I'm still looking at it's going to probably have a little bit of a. I can see a break.
See a hook back. I still see it like pulling back a little bit.
Well, it might. We're on a 1 minute chart here, so I mean, right now we did break. So I got in up here, relatively speaking. I mean, my fill didn't get me a very good fill up here, but this was the line I was looking at getting in. And actually, if I would have gotten my order in when the price was up here, I could have got my order in here. It came down, tagged it, didn't get me filled. Here with fill, pulled back a little bit. Now we've got another little trend coming up down here. But this is the area that I was looking to get in. This is my first target zone right here, but it's still not enough to get me. I mean, it's still profitable, but I'm still looking to see if it'll come down and just keep on giving me some. Right now, the CAD is showing some strength on the 1 minute, so that's where the reversal came in. And we should have some CAD strong on all three. Here we have the CAD got a little bit stronger to the dollar, but now we have the CAD strong on all three time frames to the downside, and now we're in the trade.
So Al, another confirmation is where if you put your 30-minute 62 on USD CAD, you'll see that the price is leaving the 62. Where it tagged the 62 was it rejected the 62 at actually last night. As soon as market opened, it kept on maintaining and staying under the 62. So 62 kept on pushing it away.
Here's our 30-minute 62 right up here, and we had the alert, and it's still, actually it sort of challenged that 62 off this C right here. And we're just about ready to get filled with our profit.
Yep. So I'm in Aussie US short actually, just because I saw something that was way too nice to ignore. I saw a really clean 1362 cross, and but I'm not staying in that way too long. I'll be leaving that pretty soon.
It's okay to take a profit in the trap. You don't want to be you don't want to be, if you have a trap zone, that's where you're looking for a reversal, wherever you're looking at doing. You're not looking for it to break. I'm not looking for it to break through. I mean, it could very well break through this D, but right now I'm already profitable, and I should be getting filled here just any moment now.
Yeah, there's no, like you always say, there's no point turning a winning trade into a losing trade.
No, but if this thing is either get me out with my profit, or it's going to, I'll stop out with a little bit of all right, now I'm in a risk-free trade right now.
Well, risk-free is the way to be.
And I'm just waiting for this thing to get filled. It's got across this. The spread just went from 1.4 to 1.8. So the spread just got a little bit wider right down here.
So we had the 9 o'clock hour, eh? Remember how the 9 o'clock likes to move price really, really nicely? Well, yeah. It held true again today. So
Rashawn says that he's also in the Aussie as well, but it should go long in the medium term to drop short.
Let's see.
It's an FYI.
Let's see. I don't see, just for you, I don't see Aussie US coming back to 7104 for quite a while.
There he goes. Just took the profit.
Boom.
That was my trade.
Your trade for the day out.
Now I'd be curious to see what happens right down here. If it breaks this, it could very well go all the way down to this area right in here, which is right here with my fib line. And so we have.
What's that? What's your? What did you say your next one was? Like 3152?
The for what?
Oh, I don't know. Your other target that you had.
Oh, they have a target. Well, if it breaks the D off of this retracement, then I'm looking at to come down into this area right in here.
I have a feeling I should have taken that profit. Hold on. Yeah, I'm out of here.
But I said it's got to get through this D. So like I said, here's the trap. It broke this trend. Well, this really wasn't a trend. This was just a tool. But it retraced. It came back down to where this pullback started. We had the move down.
Oh.
We had the strong move down. We had the retracement. Now it's coming back to retest this. I'm not looking at this as a trend line particularly. I'm looking at just more of the area of the parallels to the this was the retracement. This was an area in the middle of the retracement. Came back down, tested this bottom, and now I could say where this part is over.
Mm-hmm.
We're at the bottom of where the low was for the wedge. We're still in the channel where now we had the alert, and this was the original way. Okay, it did break this, but it's also I was looking at this area off the wedge. I was looking at this area right here. I'm also I was looking at the area where the D was down here, this is where it broke, came back into the wedge, retraced, and I said this thing could very well still go lower into this area. This would be what I would call another target zone. But right now you can see where from the low, we had high, low, lower high, higher low. Here's where the wedge was. It broke that off the alert, came back in, went back into the wedge, and then we were looking at that retracement to get back in. And we're looking at the retracement off of the C to here move, retraced, and then they came back down, retraced the bottom where this strong move came down. So right now it's still making a high. This was a little trend, a B, C correction. Here's the first retracement off of this area here, and now it made a lower high, but now it made an equal low right here.
So Razan, my exit on Aussie US is going to be 0.7095. That is my exit, because then I see it going long. Or at least it's going to be consolidating quite a bit. So I'll be out of it by then. Anyway, on the other side of it.
We have another alert.
Ooh, US yen. Okay, let's take a look at that one. 15-minute chart. Let's take a look at it. Let's clean everything up from this. I'm just going to start with a fresh chart. Start with my moving right now. All I can see right now, all of my moving averages are consolidating. On my 15-minute chart, they're consolidating. So that immediately tells me it was a US yen. Whoops, just what happened there? Oh, US yen, and it's descending. So we're looking at this part on the 15-minute chart. Now, this is Monday. This was Friday, I believe. This was Friday. We don't even have the Sunday open and close here, but this was Friday's low. This was Thursday's high, I believe. Yep, Thursday's high. So here's a high, a low. Now this was sort of like a flat top. You can, if you just take this Let's draw the box. This is the overall range that we're looking at from, let's see, I'm just going to take it from Friday's low, Thursday's high. This is be my area of operation. I'm seeing where the strong move down is, came back up, retested. This is a fairly strong move. And so it was a descending wedge. So I'm going to be looking at this area right here. Let me just make this box a little different here. Oh, let's see. Let's go with the. Where's my?
Yeah, I'll let you do UJ.
Range box. There we go. There's my range box. Okay, you did, and you can work on something else if you want.
Yeah, it's just because I've got 2 trades open right now, so I'm gonna manage these ones. And
I'm just gonna draw this one out. So here's our alert, because I'm not in a big hurry to take anything today.
No, you already got to win. So
I already got to win. 9:15. And so it was descending. So I'm going to start up here, but I'm going to follow my major trend line. So the fact that I've got like a double top here, I can just use this one. So I'm going to take this, go from here to here, anchor, first hit. Now we got a second hit somewhere out here. So we don't have our third hit of the trend line yet. Once we get the third hit is either going to reject it or it's going to break it to go to the, but we don't know which way it's going to break, which way the third hit's going to tell us, but the third hit's significant. It could either break to the upside, could break to the downside. So it could break out of this range, or it could hold and retest the bottom of this one. So here's my Thursdays or my Friday's low. Here's the low. Take it right over here. This is a little bit of a, here's the low. So it did make a little bit higher. Did make a little bit, here's the low. Here's a little bit higher low. And so this was a little bit of a higher high from that, but not by much. It just sort of broke that. So here's my range. Now I'm going to draw my wedge from the alert. And we're going to see what's going to make sense here. We have a strong move down to the, this is actually the third hit. This one was this area, if I pull this back over here, the bottom of this one is still been, it made a higher high, higher low. I still like this one for the trend line. I can accept this. This was probably just a couple pips, not even 2 pips. So that's okay for the anchor. Here's the hit. Here's my third hit of the trend line. It's been rejected. So here's the box that we're looking in. Let's go to a lower time frame chart. We had the alert is descending. Now, we don't know where this third hit of this trend line is, but right now we had a descending from here. Here's a high, here's a low, here's a lower high, here's a higher low. So here's where I'm going to draw my wedge. Here's the high, here's the low. Here's a lower high, tuck it in to where the alert was. And actually this one, is that going to be, let's just take that from there. Take this. Now I would have liked to have seen the alert come a little bit earlier. Because that actually took that one out. So I'm going to move this back over here.
Al, you're on the 5-minute chart.
Yeah.
Would it make a difference if you were drawing the wedge from the 15?
I think, well, basically here was where the alert was. I'm just trying to tweak it is what I'm trying to do. And so I'm still okay with this point right here. Because it was a descending. So we still want to have the alert candle be lower than something back over here. So I'm going to use this one for the reference. It comes almost to a flat top, but it's not quite. And so here's my main area, and let's see what the overall zone is. from my B to the top of where this potential could be. That's 15 pips. It's a marginal range as far as I'm concerned. Not really too thrilled about this. But here's the alert. Here would be the break of the wedge. But if it breaks the bottom here, it's got the third hit. We already got the third hit. So we know this trend line is holding so far. This is a pullback. If it breaks the top of where the A is, do we have enough room to the top of the wedge? And I'm going to say probably not from my standpoint. It's only 6 pips. So if it breaks where we had the alert, it's going to only have 6 pips before it's going to run into another wedge, another trend line that hasn't been confirmed yet. Now it's going to somewhere past where the alert was is where we're going to get confirmation. Right now, I'm just taking this and moving it up and down so it tags here, waiting for the third hit. My arrow tells me the third hit hasn't happened yet. So it could break out of the top, but I would think this would be a trap up in this area. I would think this would be a trap, especially up in this area, right up in here. So I'm going to designate this as a trap. If I can get my thing to work. So there's my trap. So this thing comes up into this area. I'd be looking more to take it short than long. So I can see what my RCS tool says. This says the dollar is a spread by 2 to the yen on the 5-minute chart. Let's see what it is on the 15. The dollar is strong by 1, dollar is strong by 2. Not a lot of conviction there. So right now we're pretty much in the middle of where the purple trend lines are. We're pretty much right in the middle. And being that it's in the middle, I don't know which way it's going to break. I like to see a stronger move, a more convincing move. If this thing can get a strong move going up to here, then I'd be looking at a pullback possibly to break it. But I want to see it pull back enough to where if I could get this trend line to go, let's say from here, and we get a strong pullback up here, and we can get this thing to come back down like this. This is the area that I would want to see it pull back down into this area to give me possibly enough room to get into this trade to here. But if you look at the price on this, you're looking at 105.40, 43 to 40. You only have a 2 pip range. So at best case scenario, if you pull back all the way back to the 30% retracement after it came up here or wherever it comes up and pulls back between here and here, you've only got 2 pips. You're not going to get your 7 pips until it comes all the way back up to almost to the 78% extension of this, which means it would have to come back. You have to get an early entry and have it break and then hit this area up in here. Right now, it doesn't have the range to suit me. And we'll wait and see what happens as this develops. But if just because it breaks up here, I'm still looking at this being a trap. And all of our RSIs are coming up, which means this thing, it's coming up. I want to see it come up and then start retracing. I want to get in down here, not up here. And we have about 5 more minutes before this session's over.
That's too fast, Al.
It was a fast one. And market's going to be opening up in another 5 minutes. The U.S. market will be opening up.
Yeah, so if you're in profit in any of these trades, you might consider stepping out of your trade and looking for a better opportunity after the market opens.
So this is still Monday morning. All the big guys are getting their positions for the week. And so right now I'm looking for a range of 40. See, we only have a 14 pip range. So we're not even if you're looking for seven pips because of your spread, if you're looking for 7 pips in a 14 pip range, that means you've got to be right on the money, just in the middle of it, just to be able to get your 7 pips out of it. And if you're in the middle, you don't know which way that 7 pips is going to go. You just don't know. Right now, the projection is based on the trend, the overall bigger trend. It looks like you would want to be getting in on pullbacks to the upside, because this is the pullback to the upside, looking for it to, well, actually we got an uptrend here and you got a downtrend here, and it's just wedging in between. So right now there's no real clear direction. Let me go to my 15-minute chart and see if I can get a different trend line. No, really. On the 15-minute, the best thing you could do if you wanted to try, if this was the move, again, you can see it's a relatively shallow move from this point to here, from the descending aspect of that alert. From here to here, you're looking at 17 pips. So if I were to say, okay, let me eliminate this trend line on the bottom, let me move it on to the top, but that was a confirmed trend line. This one's not confirmed, not for any great degree anyway. I'd be looking at the bottom of the box. You can see we're still pretty much in the bottom of our white box here. Just coming up to the top.
Excuse me, I've got a Beach Panda. He says, wouldn't this be a long position entry based on the trend? And then he says, after an opening presents itself once the market opens.
Well, you know, the thing is, it's a long position on one time frame and a short position on another time frame, and it's gone sideways in a third time frame. What I'm looking at doing is trying to find out, and all three are true. All three are true. The question is, what time frame are you looking at? So that's what I'm looking at, and see what the previous day's high, what the previous day's low is. So I'm looking at, this is the range. This is the sideways range that it's gone in. If it's going on, so we know it's going to go sideways on some range. It's trending on the 15-minute. Here it's trending down. 15-minute, here is trending up. It is trending, but it's going sideways inside this box. So what you're trying to do is find out, and when it breaks out of this range from a daily standpoint, then you may have a move to the upside to where the next high, or which would be up here. So if we put this as a target, because if it breaks out of this, it's probably going to go up and retest this. But if it retests that, where's the next one? Well, the next one's up here. So this is the next down move. Here's a drop. Here's a high, a low, a lower high, a lower low, all the way down to here. So this is the next bigger box from what I'd be looking at. This is the next bigger box if you're looking at it from the standpoint. And all you're trying to do is you're just trying to grab your 7 pips with some degree of certainty inside these ranges.
So he says, lesson for today, wait for clarity and be patient.
There you go. That's it. That's the whole thing. So we have a big box. We have a smaller box. But you see, this smaller box is right in the middle between here. If you draw your Fibonacci lines from here, if I can draw this from here, this is a straight Fibonacci. This is your upper third, your middle third, and your bottom third. Well, guess where it's at right now? It's right in the middle third of the bigger box, the one that we have with the purple lines. It's right in the middle of all that. This is only Monday morning. It's got all week to get up to the extremes. But this whole middle box area, which is right smack dab where it is in the middle, you're looking at a range of probably 20 pips. So the question is if you're looking at roughly a 20 pip range, do you have enough room between our trend line, our next series of trend lines, to be able to get that 7 pips out of there? And right now it's questionable. It's really questionable.
He says 9:30 and the market opens, retracement was on spot.
Yeah. So
a new wedge alert descending NZD USD.
which is another repeat of what we had
Did we just say? Did we just say that this morning that we're going to have another wedge?
Yep, and it's right inside that range that we were talking about, and it's in the opposite direction. And it's in the opposite direction. First one was ascending. So basically, when we were drawing these, let's see, New Zealand and DC. Let's get back to that real quick, and then we have to go.
Do you think we drew enough wedges, Al? Because we can see the wedges and we can call them out even before they even show up. Anyway, this NZD one, I'm looking short, just as it is.
So first one was ascending. This one is now descending. So let's just take this off. Let me just do this. Let's just draw this. We'll just draw this real quick here. What did I say about bouncing off the 62? I bounced off the 62. Now we have this is a descending wedge. So we have new alert at 9:30. Let me get on the 15-minute chart here. Pull this down here a little bit. 15-minute chart. This is our first wedge. Now it says it's descending. Now we're looking at this one. It broke. We had our this is our little zone that it trapped. This was the trap up here. Now it's descending. Now it's saying that the trend is, I'm just going to take this one off here. I'm going to redraw this. Now it says the trend is descending. So now it wants to go from here to, I'm going to say here. A, B, C is going to be up before the alert, which was somewhere up here. And then the D is going to be somewhere down here where it's descending. And that was retrospective, but it's still looking at, if it's descending, that means it's going in this direction, but this one's going ascending. So right now, it does not have any clear direction. And that's my story, and I'm sticking to it.
I like that story.
I like this trend right here. I like this. Coming down to retest down here someplace, maybe. And my C is going to be flatlined up here. Here's my box. My box just got a little bit bigger to the upside from what the original one was. And we don't really know where it's going to go. We can look at this as I'll flatline this. I can pull this one up to here. I'll line this all up. This is our new box. No, here's a retrace. Here's a strong move up. Here's a retrace. I think it's probably going to go to the upside. I'm just looking. I'm thinking this will go to the upside, looking at the retracement from the strong move up to the retracement to the bottom, which is where I got. Oh, this is New Zealand. Okay, so here's our 38% retracement. Here's our box. Here's our trap down here. There's our trap. Here's our entry right here. If we could break to the upside, here would be my entry to be paying attention to. And actually, I'll be looking at entering down. Once it breaks, we have a pullback. Once it comes up here, here would be let me just take this off. Here would be my buy stop. If I were to take this trade, I'm not sure it's going to qualify for it, but this would be a buy stop. This is buy to enter to buy. And here would be a target, my first target, clone. So here would be target 1 right here, which is right at the top where the A is. This would be target 1. Now the question is there enough room to make it worth my time taking the trade? If here's my entry at 66.41, my target's at my first target up here. It was because now you've got, that's as high as it got. Are you willing to take the trade long for 5 pips? Now, if you get in, I'm just going to show this. I'm just going to show how this was going to work here real quick. If I can get in here, that might be too late, but let's see if I can get it. Okay, so it's going to be close. I'm going to do a buy, stop, 10 pip, 10 pip. I'll just go over that. Here's my entry. My entry is going to be at 66.41. Can I get in 66.41? 66.41, call right there. Entry, buy, stop, make it here. That way I'll be filled at 66.41 with this if it comes up there. Now it's going to have to pretty much go past that to get filled. But here would be my fill. Here would be my here would be my target. And that's only going to be 5 pips. That's got to be my first target because it's got to break here. Now, if it breaks that, I mean, you could put your target up here, but you may want to be expecting to bounce off of this part right down here if you get filled. And where's my moving? My RSIs are moving up correctly. That's good. We have this is New Zealand. Yeah, that's right, New Zealand. Okay, New Zealand is strong to the upside by only 1 on the 15-minute. So if I get filled here, and then my stop would be at the bottom of the pullback, which would be right here at the probably at the trap level. 8 pip stop. And a lot of times what I'll do, I might be more apt to maybe put it at the bottom of this little zone here, the trap zone, because you want to be below the trap, and that would be a 12 pip stop. So you're looking at a 5 pip target, 12 pip stop initially, but you also have the potential of a target up in here. If it breaks to the upside, you'd have a potential of a target up in this zone. I can take all this off and see what happens. It's all set up. Where'd my trade go?
What happened, Al?
I don't know. My trade didn't.
It didn't take?
Well, it didn't trade. It probably has some sort of a. Oh, who knows what. Anyway, this is where the entry would have been. Now, I'm not sure. It may not have filled yet, but I'm trying to figure out why the trade's not even there. Buy, stop. We had 41, I believe, 66.41. Stop, target. There it is, still there. It must have triggered it, but it must not have liked it for some reason.
Hmm.
Demo.
Talk about broker manipulation on a demo account.
Yeah.
They just want to get you used to it.
Yeah, no. We use brokers that don't usually that don't manipulate your trades and don't have dealing desks. And one of the things you need to do when you're trading the Forex is find yourself a good broker. Do your homework. Don't trust what anyone else says, because all they want to, a lot of people just want you to join their broker, and then they get a certain amount based on your trades that you execute.
Okay. Right, this one I'm in the trade here. Okay.
There you go.
You can say I got in at 41, so I had to buy stops. That means I'm going to get filled at that point pretty much, unless it goes really so fast that it can't. Basically, what happens was when the price gets your price, it triggers a market order. Now, if it's one of those candles that's moving 100 pips in 5 seconds, you may not get that filled because the market order says there's going to be a whole lot of other. It does put you in the queue with everybody else. Normally, when it's this slow, though, you'll get filled at your stop level. So that takes care of your pit, which means it had to go up 1.5 pips before I got filled, and then it's going to have to go through 1.5 pips to the upside in order to get my take profit. That's the mechanics of this. I'm not saying this was a good trade. You only had 5 pips to the top part. Now 5 pips is still 5 pips. And if you want, and there's a good chance that with the energy of this 15-minute RSI, that when it gets up here, you're probably going to be testing this and it may break through the top. It may break through the top to give you your target, maybe another target up here or a second target.
Oh, we got something. All right, just a sec.
It's spelling there, Al.
Yeah, I see that. Fat fingers. That's better.
If you guys are if you guys are trading Euro US, you might consider looking at a short. If you guys are playing around with that, just that's something you can take a look at.
We're almost at 9:45, guys.
Yeah, we need to get out of here.
Yeah, let's get out of here. We're gonna get kicked out. Anyway, appreciate you guys all for coming.
Yeah, on that note, take a look at this, see how it plays out, and we'll see everybody tomorrow. I hope everybody has a good day. Stay green.
Have a good day, everybody. God bless.
All right. Take care, friends.